Okay, recording is started.
Right. Well, thank you. All right. Well, hello, everybody. Happy Friday. And thank you for attending the Bales Informative Friday sessions. My name is Dave Thomas. I'm Vice President of Marketing and Sales for Bales and Associates. And look forward to spending the next hour with you in a really exciting session. Today's Informative Friday presentation is Reconciling Subsystems to General Ledger. Today's presenters will be Lisa Watkins and Steve Sinisi. And before we get started, and if you were not familiar with Bales, I'd like to take a second and tell you a little bit about us. We've been in the Infor ecosystem for over 26 years. Jamie Bales founded the company back then and is still our president and CEO. We're entirely Infor focused. We do nothing but Infor implementations, upgrades, and managed services. We support all aspects of the technology, including S3, Landmark, and the Cloud Suite, HR, finance, supply chain, and technology. In fact, we have been recognized and given partnership awards from Infor in 8 out of the last 10 years. Our consultants bring 15 plus years of experience in the space with the equivalent in professional experience from industries. Some were former benefits managers, compensation managers, directors of supply chain, as well as former controllers and technology officers. Recently, we were top of class for those of you in healthcare. That class is a rating service. We were ranked at the top of the list as far as Infor implementers, and we're real proud and really excited about that ranking. Other exciting news that has come into play with Bales as of 2021 is we've become part of Nordic Consulting, our wholly owned subsidiary. We will retain the names Bales and Associates. The organization will continue to be led by Jamie, and Nordic will provide us with resources to fund our growth, expand our business, and support our customers more effectively. For healthcare customers, it allows us to bring together Nordic's capabilities in the EHR space to provide a more holistic solution, including specific expertise in EHR and ERP integrations. The combination will offer a best practices model to reduce implementation risks and leverage the data from both systems to drive insights and outcomes. Again, we'd like to thank you for joining us today, and I will turn it over to the presenters. Thank you.
I'm sorry, I was on mute there. Hello, everybody. Welcome. My name is Lisa Watkins, and I am a solutions architect at Bales and Associates, and have been working with the Infor product for quite a number of years. The presentation today is meant to cover Infor version 10, referencing some specific form names, but the process or some of the items can still be relevant if you are on version 11 or the FSM product. So this is information that we're providing, informational only to assist you in your process. It's not meant to be the end all that will solve any reconciliations you may have. All right, so the agenda we're going to cover today is we're going to review some of the different modules, subsystem modules, and how we can get that balance back to the general ledger accounts associated with it, some of the common challenges we've found that clients have. So for accounts receivable, we start with it on the accounts receivable company on AR10. There is an accounts receivable code that is assigned to a GL account. This is the account that's representing your receivables balance, and this is the account that we're going to be balancing our subsystem reports to in the GL. The primary report that is used to tie this out is the receivables tieback report, the AR256, and the report's going to list things by the open receivables by AR code. Some common issues that we have encountered with the AR balancing is if entries aren't posted. So we get ahead of ourselves. We do the our subsystem module. We do our close, run our final distribution postings, but the GL has to do that final posting to update the GL balance. So the first thing we always check for is to ensure that that has been done before we're trying to tie this report to the GL balance. Another common error that we've encountered is that that AR account that is set up on the company is used manually on an invoice or on a memo entry, and it's going to try to hit to that, but the offset would be it. So it's not really making any difference on the GL while it's still updating transactions in your AR system. Okay. And it looks like I jumped on this one. So here's the GL 190 where we're referring to the posting being happening. And finally, on this page, the conversion problem. So did the former AR system balance to the Infor AR and Infor GL at conversion time? And we at Bales try to ensure that this happens with our conversions and that cutover so that we can eliminate this as one of our common issues. Any questions on AR? Purchasing balancing. So purchasing accounts are defined on the match company as well as on some of the inventory locations, but the one we're going to refer to first is the R&I account, the PO receipt accrual, R&I, receipt liability, different terms that are used. It's set up on the matching company as the PO receipt accrual account. This is the one that we're going to match to our R&I report, the PO 135. And it should not be defined anywhere else in the system but on this match company. One of the jobs that is run during the purchasing close process is the PO 135, which will generate the liability for the received items that we have not yet paid for. When we run this PO 135, it will create the journal entry for the non-stock and special order items that we have received, not yet matched. The inventory items already hit the account when the receiving is done in purchasing. So the PO 135 only creates the journal entry, an auto reversing journal entry for the special and non-stocks, but the report will list all of the items that make up the balance that should be tied to your GL account. So common causes, again, any entries that are posted directly to the R&I account in GL will not be reflected in the PO 135 report. So the first thing we can do is check the GL 90 to verify that they do not have any system codes other than POIC, and it doesn't say it on here, the AP as well for when those invoices are paid. Okay. Was the R&I account used as the offset when you entered an invoice? Again, a big no-no that we cannot use that account. We want to use it for the system to generate transactions to it. We would never as users select that account. Okay. And of course, the GL 190 needs to be run after this entry is created on the purchasing side. As the AR, and this will be common for all the subsystems, we want to ensure any conversion problems. Did the former PO system balance to Infor PO and Infor GL at conversion time? I've learned over many years of time that typically conversions of open receipts is challenging. And in my experience, supply chain resources find other ways instead of actually doing the conversion of those open receipts. And if that's to happen, recommendation would be that the R&I account, the PO receipt accrual on your match company, when you're moving onto Infor or upgrading, is to use a fresh account if you're not converting, so that the old account will have your legacy balance. And that would ensure that once you start utilizing the system, that you're hitting that new account, that will tie to that PO 135. Okay, so we want to try and alleviate any of the conversion problems. Again, those of us at Bales now, we do everything in our powers during conversions and cutover to convert open PO lines and open receipts and ensure that that is tying out at the time of the conversion. As I said when we were looking at the match company, you want to check and see, is that account on any other company or process level pointing at that R&I account on another field? Only the PO receipt accrual should be using that specific accounting unit and account. because if anything else is posting to this, the PO 135 will never balance because it's only representing open receipts. So we want to verify that it is not populated on the GL account category for inventory receipts. There's a field there that looks for, it's just called receipts, I believe. And so have found some times where that has incorrectly been mapped to the same account. Any questions on the purchasing? I'm going to take a minute here to also bring to attention the match company has a lot of account numbers on it, or accounts that are required to be on it, as well as inventory locations in those account categories. And one thing we have learned over the years is that, supply chain needs to populate them when they are building your system or upgrading or reviewing them. And they typically will ask finance for what accounts to put there. So it really takes a combination of purchasing and finance to work together to communicate what is going to hit that account, what types of transactions, so that we can ensure that the proper type of account is being populated. Infor has done a lot of work lately in the last few years, doing some documentation of what those accounts should represent, and even giving recommendations as to whether it should be a balance sheet or an income statement account. So if it is something that is going to be a clearing account that's going to wash out as things process through the system, we would recommend that to be a balance sheet account, because those are reconciled on a monthly basis typically, and those should net to zero at the end of the month. However, if it's the final end, like an item cost variance that we don't have any inventory on hand, and there's an item cost variance for an inventory item on the invoice, that's going to hit to an expense account. We don't want that to go to the balance sheet. So in purchasing, while this one's only addressing like the R&I balancing to that account, those other accounts should be reconciled as well. And depending on what you're using on those and what your other processes are, you can work with your consultant to ensure the process for reconciling those. Accounts payable. So accounts payable reconciles based on the invoice accrual code, which is defined on the company. However, if you use multiple process levels, sometimes you're doing that because you want to have multiple accruals. If you use zone balancing or have different pieces of your organization. So the accrual account is tied to a specific accounting unit and account. And that's where we're going to post all of our invoice entries. So when we run distributions for our invoice entry, we're going to be debiting our expense and crediting this accrual account. Then when we pay our invoices, we'll be debiting this account and crediting our cash. So at any time during the monthly close, we will have invoices that may not be due yet and have not been paid. And so we'll get a listing of those invoices, and that should tie to the GL account that is assigned to the accrual code that you're using on your invoices. Once again, this account should not be defined anywhere else in the system. So to get the report to reconcile to that account, we run the AP 136, or the invoice accrual reconciliation. We assign it the reconciliation date for the period that we're processing or closing. I will say you see here the currency option is invoice currency. If your organization is multi-currency, and depending on how you're doing your processing and what you're using, that option may be different for your organization. Okay, I do recommend running this in the report option of detail when you're running into any, if you expect that you might have to do some deep dive into it. Running this report in detail option ensures that if a vendor has a debit and a credit, so an invoice and a credit memo that net to zero, that you would see each piece of that, not just the zero. If you don't want to see that detail and see all vendors on it that have anything outstanding, you can run it in summary. But in detail options, the only way you'll get every vendor, even if it's netting to zero. Okay, and this parameters is shown here is not running it for a specific accrual code. It's running it at a company level, but you can run it for a specific accrual code because each accrual code should be matched. Each unique accrual code should be matched to a unique GL account. One of the common things people aren't aware of, but on the reconciliation report, it provides the invoiced amount, the paid amount, and then the difference. And it's that difference column that should represent what ties to the GL. Okay. And the report is listing invoices that have been paid, but the distributions have been posted. And it also lists invoices that have distributions posted, but has not yet been paid. So again, we don't want to post anything directly in a GL entry to this account. If we do any journal entries from the GL, then it won't tie to this report because it's not part of the accounts payable process. I see this happening on occasion. An invoice was miscoded and someone may try to correct it with a GL entry instead of bringing it through AP and adjusting it on the invoice. And that can cause us some challenges. So anything that is system code of GL would definitely cause an out of balance issue unless the GL is to clean up something from the conversion. Okay. A mistake, don't see it too often, but have definitely seen it over the years, is in trying to reconcile this, somebody cleaning up R&I or something else, people may enter an invoice and try and code it to the accrual account. When you do that, you're basically doing no impact to the GL because the system automatically offsets whatever's entered on the AP invoice to that accrual account. So when you run that, it does not impact anything. So you can run the AP 275 for the accrual account, and that will only show you the transactions that had come from the expense side. I'm not sure if you're all familiar with that, but the 275 is an invoice distribution listing for a period of time that you can run. So populating that accrual account, you'll see if any invoices were coded there in there. And of course, the journal posting has to be done. AP's doing their close process. We typically recommend you run the report at the time you're doing the AP close, but you may not be ready to compare that to the GL immediately because finance will need the time to post those entries to the GL. As always, conversion problems can cause that to be out of balance. So if we don't convert, if we convert our GL balances, but we do not convert open invoices, then our system will not be in sync. So we do want to identify that and make sure that starting on go live or cutover that we are 100% in balance. We'll verify again that that account is pointing to the same invoice accrual account, and the invoice accrual code should be using this specific accounting unit and account. More commonly on the AP 136, most of the items are going to be distributed, not paid. If items show as paid and not distributed, take a look to find the posting date for that transaction's distributions. Is it something, if closing controls are not used, is your posting date into the future? And is that something that, will catch your attention that, hey, this was an expense that we should have entered earlier. We've paid it because the system is not waiting for the invoice to be distributed before it can be paid. It just has to meet the due date in hold codes. So just something to look at. Check to see if the liability account is defined on multiple accrual codes in AP. So if you're running that report wide open, like I showed, and you have multiple accrual codes, if you map those multiple accrual codes to the same company accounting unit and account, then you're going to need to summarize the different accrual codes to tie to the GL. Okay. If you're doing a one-to-one, you can run your AP 136 by an individual accrual code, so you have a report that maps directly to a specific account. Okay. So little tricks on this one is to see which way are you out of balance. Is the GL balance higher or lower than the invoice reconciliation report? If the GL is higher, it is likely that the AP 170, which is the payment processing, or the AP 190, the invoice reinstatement transactions, have not been posted. If the GL balance is low, it is possible that your AP 175, which is the invoice distribution transactions, have not been posted. You can also check the cancel dates on invoice, void dates on checks, wire transfers to see what period they posted to. Be sure that a journal entry posting date has not been changed. AP 136 only reads AP, so if the post date has been changed in GL 40, the change will not be reflected on your report. That can happen again if you're not using closing controls. If you are using closing controls, it's not very likely that this is going to be an issue. But just an FYI, subsystem entries that are coming from AP, PO, IC, they can't be changed when they get to the GL, right? They're meant to stay exactly as they came from the subsystem, so that your subsystem does tie to the GL. There are a few things that can be done. For example, if it's an account that's invalid after the release, or the entry gets out of balance, you might have some entries to error suspense. But the other thing is, if closing controls aren't turned on, you might have put a posting date for last month, which the GL should have been closed. But if somebody had opened it up for back posting, then that prior period is available, and when that entry is run through, it may try to go into the prior period. So if it does that, you have the ability to move that journal entry to a different period. You're not allowed to change the details of that journal, but moving that is what I'm referring to, is going to put that into a different period. And again, that post date is important when you're looking at what's appearing on your AP 136 and what period it's in the GL. So another common question I get from my clients is the open payables versus the AP 136 invoice accrual reconciliation. A lot of users assume that these should tie, since the 230 is an open payables report and our invoice accrual reconciliation is basically saying these are invoices that we've distributed, but we haven't paid yet. But these reports are not designed to balance with each other, okay? The 230 is reporting on invoices that are released and not yet paid. AP 136 reports on invoices that are paid and not yet posted, or invoices that had expenses posted but are not yet paid. So for example, an invoice that's entered and released today but has not hit its expense posted to GL would show on the AP 230 as an open invoice, but would not show on the AP 136 as it is neither paid nor has its expense posted to the GL. I hope you guys, if you hadn't known that, this clarifies why they don't tie. Any questions on accounts payable? Okay, inventory
Lisa,
control. Yes?
sorry, Lisa, there is a question in the chat.
Okay.
So they said, how can we get cash balance by fund on outstanding accrual and AR when you have multiple funds?
I am sorry that I will have to defer on that, because are you on version 10? And when you use the term fund, are you referring to grants? That is not my area of expertise. So if you put your username in the chat as well, we can reach out to our colleagues and see if we can get you an answer on that. So your fund is part of the accounting unit, I see came up. So is it a level in your accounting unit? We'll get to the end of this and then we'll open it up, and I'll move the presentation, I can read the chat and see if we can help you some more. Okay, but
Yeah.
please make sure that we have your email address so that if I can't answer your question, I can get with someone that can assist. All right. So inventory control. So again, I'm not a supply chain resource. I'm a finance resource, but over the years, we want to ensure that everything ties out. So inventory control, the inventory account is defined on the general ledger category. And this is our inventory account that we're going to match to on the general ledger. This account, as all the others, should not be defined elsewhere on the system. The inventory valuation report is what we're going to use to tie to that GL account. So this is used to balance. If the valuation is needed at other times, you can also run the IC 234 for a period end valuation. The IC 233 is as of that point in time, what is the inventory valuation? My recommendation is generally that while you're doing the inventory close, that we ask inventory, whoever's doing that close process, to run this inventory valuation and provide it to finance so that we have a nice clean at the time inventory closed. This is what our balance should be in the general ledger, because finance won't be reconciling those accounts most likely for several days. All right, so common issues, starting to sound familiar, I'm sure. But again, any entries posted by the GL directly to that inventory account will not be included on the inventory valuation reports. So you can check on GL 90 to see if any transactions have system codes other than IC in the inventory. And then if the inventory account is used manually on invoice distributions, again, something we don't recommend by any means, you can run the AP 275 for the inventory account, and that will let you know if anybody posted to it directly. So was it posted on another system account that is naturally offset? We can review the IC to verify that. And we want to make sure that the posting has happened before we're doing our reconciliation. Conversion problems, again, we want inventory to tie out at day one. You're converting, you're loading your physical inventory at go live. And you're also potentially converting your GL balances. One thing that's very common with Infor is you cannot convert inventory transactions without impacting the GL. So it does create journal entries, unless you get tricky with the accounts. I'm going to give that disclaimer, but I'm not going to go there right now. But the GL that you may be bringing from a legacy system might, you're going to be bringing over the inventory balance as well. Then you're going to load your physical inventory. And so now you have it in there twice. So a reclass entry is typically required when you load physical inventory at cutover. So we want to ensure that it's in balance at the time of go live before normal processing begins for inventory control. And I can take some questions on IC, but it is not as familiar with that as well, but other than from the finance side. But if you do have questions, you can put them in the chat or ask when we're done and we can follow up with you. So asset management, this one's kind of near and dear to me. I started my career working with the fixed asset modules way back in the day. So asset management has some moving parts on it, right? So asset management accounts are defined on the asset types. Okay, these are the accounts that we're going to be balancing to, and these accounts should not be defined elsewhere in the system. Okay. And you can have multiple types coded to the same GL account. My recommendation is that you use the subtypes if you're doing something like that. For example, in the screenshot above where you see equipment and then you have the breakdown between computer, grants, and medical, the equipment account might be the same in the GL, and you're going to be assigning the same asset account to all of those items. But you want a different level of detail on the asset management side so you can identify the assets that are computer related or grant related. So in that case, it is common to use the same GL account, but it's when you're running the reports and how you run them that you'll need to do it. If, however, you have equipment and then you have something like major movable and fixed equipment, and they're both hitting and they're both types and not using the subtype, then you would have to summarize those on the report to tie to the general ledger. So there are a lot more reports on the asset management side for balancing. So my favorite is the AM260, which can list the asset financial information by the book. It can be subtotaled by type. Most of these reports choose the option of how much detail you want. So typically the AM260, we can run it by asset and we can have an asset listing from that. But you can also deselect the asset level and just do it by type. And then you just get a couple page report that will just give you the total by the different types and subtypes. Okay. The AM220 is the assets that were added during the period and will give you a total of those amounts. The 225 is the adjustment report. And unfortunately, this one, because an adjustment can have a financial impact or could not, you could be doing an adjustment because you're changing a description or changing a method, but it's not going to have a financial amount associated with it. The AM225 does not provide a total of what happened for adjustments through the period. So you'll have to do a little bit more work to identify adjustments that were made that had financial impact if you're using this for the reconciliation. The 230 is the transfers and the 240 is the disposals, and both of those will have a total of the amounts on those. So if you're doing a roll forward, these are the reports that you would run to total up these amounts. And then the AM270 can reconcile the asset transactions to the GL by the company and the accounting unit. And the 275 is like what got posted to the GL. All right. So on these, if you're reconciling, if you're using the AM260 at the type and subtype level and you reconcile to the GL and it does not tie out, then that's where you can go and dig into these different pieces and find out what it is. There is a common, and I'm not sure if I have this on the next slide, but I just want to talk about it this time. This AM275 is what posts to the GL from the asset module. Anybody who's familiar with the asset management module, when you enter an asset or transfer or dispose of, you get the journal entries displayed on AM20.5. And those can be memo entries, especially on the addition, and you have to accept them in order for them to actually post to the GL. So one of the common things, if you aren't reconciling to the GL, is to run the 275 for the period and then run it against these addition reports and transfers and disposals as applicable, and ensure that every asset that was listed on the addition reports has a corresponding general ledger account transaction on the AM275. I find that's probably the #1 culprit of getting out of balance on asset management. So I already spoke to that one a little bit, but the asset accounts, again, we don't want to post GL directly to the asset account. Okay, we want to let the asset management module post it. And we do that by using the clearing account on the account setup. But I have had some clients that just go directly to the asset account and instead of using a clearing account. So that can make things challenging if you are coding invoices to the asset account directly instead of using a clearing account, and the asset or that invoice doesn't get turned into an asset during that period. It's going to be in that asset account and not in your asset management system yet. So using that clearing account and working on that, reviewing how you have your account set up would be a definite thing to consider. We want to make sure, again, the AM entries posted to the GL. And again, were all entries generated during the process? That's that 275 that I was just referring to, where you can compare that to the other reports to verify that all your transactions or all the processes you went through, that they all created GL transactions. And that is what I have. Any questions? Open up my chat.
I didn't see any more, and I took down the notes for the ones in there, so you can get back to us.
Okay. So I don't know if I totally understand that, what we're trying to do. On the cash balance, there's so many things that would have to be identified on this, on what you're using and how you're doing some processes. So if we can reach out to you and get some follow-up on what's going on, and it'll segue into something we offer at the end of this that might be right up your alley. So before I get to that, and I will come back if there are more questions, I do want to show that we have additional webinars coming up for the rest of this month. Every Friday, we have 2 sessions, one at noon Eastern and one at 1 o'clock. So we do have GHR benefits and creating and scheduling recurring coming up. And then the 23rd, an HCM, and then the 30th. So to the person asking about the funds, this coffee with a consultant, what we do, and I'm sorry, Dave, if this is something I should pass back to you, but perhaps we can, you want me to pass it to you?
No, that's good. That's okay. You can finish your thought there.
Okay,
No.
then. I was gonna say, we could possibly schedule a one-on-one for the person with the AR cash balancing question that I wasn't able to answer, and get a little bit more details to be able to answer that question.
All right. Thanks, Lisa.
Did something else pop up on the chat? I thought I saw one. Molly, did you see?
I don't see one in the chat that's to everyone, unless somebody's.
Okay, so I got one privately. Why would you not run your PO 135 monthly? I.e., what if you were doing year-end balance? I certainly hope you are running your PO 135 monthly. In all my years, I've had one client that did not run that in update mode to create that journal entry. So the R&I report, whenever you do run it, represents the open receipts you have in your system that is not been paid yet, and should tie to that R&I balance. So whether you're doing it monthly or annually, the report should still represent it. However, that's a bigger picture, that running it monthly is, you not only use that report to reconcile to the GL, but typically you want to work that, the supply chain and the AP team will work together on that to identify some receipts that are pretty old, or, identifying your criteria. But if you've got something you received 6 months ago and you still haven't been invoiced, you want to be working those. So whoever asked the question, I certainly recommend that PO 135 is run on a monthly basis and reconciled to the GL, as well as worked to try to reconcile and clean up any open receipts that are beyond the date range that your organization sets. So hopefully that answered your question. If it did not, please add your email address and we'll be glad to get back to you. All right.
All right. Well, thanks, Lisa. Great session. And thanks everybody for attending. As Lisa said earlier, we have some additional sessions next week. If you're interested in attending, please go to our website to register, or email brian.waters@balesllc.com. And again, to mention, the Coffee with Consultants is a great offering that we've made available to all Infor customers. It's in addition to getting some additional input on today's session, we offer you, at no charge to you, 30 minutes to spend with one of our consultants specific to your request to discuss anything related to your Infor system, how it works, questions you may have. and better ways to do things. Again, 30 minutes with a consultant over coffee or whatever your beverage of choice may be. So thank you for attending. We look forward to speaking with you, meeting you at user groups in the future and at Inforum, and to you joining future Bales Informative Fridays. Thank you.
Thank you, everybody.
Thank you, Lisa.
Thank you.